one thing I just wanted to point to answer Anuraj's question on difference between Solana and ETH. So there's the initial proof was proof of work, right? Like for Bitcoin. And then Ethereum is about to switch from proof of work to proof of stake, from what I remember. But Solana came out with, I think they used an old white paper for something called proof of history. So the really short answer is that they're just using a different way of validators checking transactions. So I think all of the validators need to prove that they have the same history. But there is a longer answer, and it's I don't have the technical know-how to be able to explain it. I can go try and find. I'm sure there's a couple of videos, or if anyone has like a more sound technical explanation, I think that'd be interesting to me too. If not, I can move to the next question of why is Solana cheaper?
Can you guys hear me now, by the way?
Oh, yeah.
Sorry about that. Cool. So the questions I had, so if I go on like Crunchbase, I can see Solana's raised like $340 million. And the question I always have is like, so that's building theoretically the mainnet and some of, but then what's kind of the thesis in terms of how, I don't know, I guess I just don't get it. Like in terms of how like the main folks are making money back, is it in terms of like the general ecosystem growing? And then when you look at these giant ecosystem diagrams, I always kind of wonder, is there an easy way to like get a sense of like how much there is there behind each of those diagrams, like in terms of, how many developers or funding or things like that? And then, like when I look at, and then when I was kind of like, I was going down like the DeFi rabbit hole, like Solend, and I was trying to figure out what they had these things called liquidators. Like if you over allocate your staked funding, and I was like, what on earth is that? So those were some of the questions that popped up for me.
Yeah, those are, yeah, it's very
Just one question to Patrick. Is the money raised was from VC or by issuing tokens or something?
It was VC.
It was VC.
Okay.
I think that's actually one of Nathan's questions about what's driving the cultural difference. Solana is, I think, like the poster child of VC funded coins, right? It got a lot of funding initially, and then there's a ton of developer interest because they are using that VC funding on lots of hackathons, marketing, making the development story. The developer story is really good for Solana. Like the APIs and docs were actually pretty easy for me to follow. I think the very professional developers are still in ETH though, because that does seem to be where the money is. But there is a lot of developer interest in Solana. So I think like the cultural differences you see between projects could really be largely driven by VC funding. All right, so going forward, should I just like kind of read out questions and we can like discuss them really quick? Does that seem reasonable, or does someone have another? What is the usual mode? I'm kind of looking to Jenna or Anuraj or
that's fine for me.
Yeah.
Well, we just discuss, and then there is an open floor after the discussion. But we can continue reading the questions and have a discussion on that.
I think as we do that, I would like to not lose sight of your first question, which is like, how do we stay abreast of it? So it's like, do we need like a list of questions? Do we need to like think about like ways to, like keeping an eye on that, I think would be helpful, because we have like 23 minutes left.
I agree. I don't mind. Like, I think maybe we can reserve like 5-10 minutes at the end just to like get everyone's thoughts on how we move forward. Because it was very easy. Like we could spend another 60 hours on like Solana ecosystem apps. Like I think I spent the first couple hours just watching random YouTube videos, and it's like it is a limited utility. It's very interesting stuff. But I think from the, let's say like the elder Yaks, I did kind of want to understand what the, because I want this to be useful for YC, right? So I think I'd like to get to that question. But I think some of these questions that people have asked are really good ones, and we can go through them really quick. The why is Solana cheaper answer, one thing I learned while going through this is just that there are a couple of sites which show you I think it's called the value, the token value, right? The total token value of every project. And what you'll see with Solana is every project underneath, like the audio one or the gaming one, every one of them, they issue their own tokens. And then they also have like a project market cap. So one way of looking at why Solana is cheaper than Ethereum is looking at the total market cap of like the total economy of the things that are running on that coin, right? So Ethereum has a massive market cap compared to Solana. Honestly, one of the things is Filecoin. There's a couple of heavy hitters with Ethereum, large projects with very large market caps that are making that just make Ethereum more expensive than Solana. Did someone have something to add to why Solana is cheaper? So I think it's like a function of younger coin with lower number of projects, with not that many projects that are heavy, like that are high market cap utility. Okay, I'm gonna move on, and I think Nathan had a question about how DEXs have moved, but there's not a lot of support for Solana name service. One thing I saw, the reason DEXs have moved seemed to be that there's a project called Project Serum, and I think I included that under DeFi. Yeah, under trading. So it was actually pretty cool. It basically allows really quick conversions from any two coins. And because Solana has the cheapest transaction, what do you call it? It has the cheapest transaction cost. It's very cheap to create a smart contract that goes from Bitcoin to Solana and then Solana to Ethereum. So a lot of DEXs have kind of moved to this for their backend. So like the end user doesn't have to really see that it's on Solana, but behind the scenes, they are moving to use Solana just because it's a very cheap transaction cost.
What is the DEX?
A DEX is a decentralized exchange. So like at the bottom, there's an appendix with acronyms. So if decentralized exchange is the opposite of Coinbase. So for Coinbase, you are trusting Coinbase to do the exchange for you. So you have to exchange dollars for Bitcoin. And then you're doing that exchange with Coinbase. And then Coinbase also holds your private keys. A decentralized exchange is the opposite. It's kind of the inverse, really, where you can do a direct exchange between Ethereum and Bitcoin. And what's happening behind the scenes are a couple of smart contracts, which is why it's possible to write a decentralized exchange through Solana, because you can set up a smart contract for, a key to exchange their Bitcoin for Solana and then immediately swap for an equivalent amount of Ethereum. But really, DEX basically implies that you're exchanging coins for coins, whereas a centralized exchange, and also you keep control of your private keys, right? Like you connect a wallet to the decentralized exchange, and then the DEX never has to know your private key. It basically does the swap for you through a smart contract. Did anyone have like additional info on DEXs or any other things that they want to kind of plug for why DEXs have moved to Solana?
Yeah, I think
Yeah,
Solana is cheaper because of the network effect. So if you have a network effect, you can
No, but riffing off of what you said, I do have sort of what could be another direction that we could go for discussion, though it's kind of very rabbit hole, so I don't think we want to prioritize it. But it would seem that to do a swap, you'd need a smart contract. You'd need two smart contracts, one on each chain, and so understanding more how you isolate yourself from, say, like the high gas fees on Ethereum in that situation. You couldn't, or maybe I just totally misunderstand how smart contracts work, in which case maybe a general smart contract primer. But that seems like a direction that's sort of an open question based upon just what you were saying about Project Serum in my mind. It's not clear to me.
Yeah, that's a good question. So full transparency, this is all like a week level of Google, a week of Googling, right? So I can give you like a very, very basic answer, and I think it should just be a jumping off point to understand smart contracts better. Because yeah, I'd love that understanding as well. My understanding is there are a few ways of doing it. One way is that there are these things called liquidity pools where people have put in their coins. People have added 50% Ethereum, 50% Bitcoin. And so when someone wants to swap Bitcoin for Ethereum, they just swap it with the liquidity pool. They still, like you said, they still have to handle the gas fees. Like there's no way of getting around the fact that you need to pay a validator to actually add the transaction in. But at least this way, you don't have to like find another person with the requisite amount of tokens to swap with. But there really is no, like, Project Serum doesn't make everything cheaper. It just makes the translation layer cheaper because it's still quite challenging to actually just do a Bitcoin transaction itself, right? Like there's only one every 4 minutes, one block created every 4 minutes. That still has to happen. It's just when you're doing it with Serum, they're pulling from a pool of tokens, is my understanding. Anyway, I don't know if I added clarity or I added more ambiguity, but I think it's like definitely a good question to understand why it's better than just doing a direct ETH to Bitcoin swap.
That actually really helps clarify some things for me.
Yeah, and especially the questions they're really interesting. So like, I'd love to like go deep on a couple of these too and answer them. It just require more time and energy. What on earth is a liquidator in the Solana DeFi? Ooh, a liquidator. That might be like something I need to click on. But like Solend, from what I understand, is basically a money market fund, right? Like you can put stuff in Solend, and what you're doing is you're taking coins that you own, and then you're actually giving it to Solend in exchange for them giving you a promised APR, right? And then it's a liquidator because it allows you to it allows someone else to take a loan off of that Solana. So let's say they have some plan of staking their Solana somewhere else. Then they can take a loan and they can add leverage to themselves. So like that's generally the idea of, so it's basically a bank, right? It's an interest rate. I guess from their landing page, it's just giving you an interest rate. I thought I knew what a liquidator does. Where are you seeing that, by the way? Liquidity mining? There's another Oh yeah, go ahead.
I'll share the link where I was seeing that.
Yeah, I mean, like, when borrowing to avoid being liquidated. Yeah,
There's
I
the how it looks
more.
page.
But what's really interesting and what I thought was there are a couple of these things that feel scammy until you think about it a little bit more. And one of them was if anyone looked at marinade.finance, the fact that you can like give them your soul and they give you something called M-Soul, which I'm assuming is marinade soul. And then you can use M-Soul as a separate token and then stake that somewhere else to get more interest. That felt a little bit like a pyramid scheme, but it does seem to check out based on these liquidity pool rules because M-Soul is basically a promissory note that it's like an IOU from marinade.finance. And I don't know how many people have read, there's this beautiful book called Debt, The Last 5,000 Years. And this is kind of how money got started to begin with from that book. That was their central thesis, is that money was created out of debt. Like debt is the thing that came first. So, stores were giving out promissory notes. And then these promissory notes just eventually became paper money. So it kind of makes sense. It felt like I had to squint at it for it to make sense, though. But anyway, that's kind of liquidity in their mind is you should at any point be able to take SOL and liquidate it into another currency because they have pools of this, pools of money, pools of fiat / cryptocurrency on hand. And people are incentivized to do this because they earn interest. Right? Like that's kind of the liquidity angle.
So I'm not sure if this is exactly how it works with Solend, but I'm familiar with the MakerDAO protocol, and the way that DAI works is you have vaults where you can deposit funds, and the DAI is over collateralized, so you have to put like 150% Ethereum in to then be able to like withdraw 100% worth of DAI. But you wouldn't withdraw all of that DAI because Ethereum is a volatile crypto asset. And if it was to fall below the threshold of what is needed in order for that vault to be properly collateralized, then that vault can be automatically liquidated, and all of the DAI or all of the Ethereum that is equivalent to the DAI that you've withdrawn can be sold in an auction. It's a Dutch auction. It's a tongue twister. And so that's how it works in the case of MakerDAO. I don't know if it's like the inverse principle with Solend, where like you're incentivized to deposit funds and earn interest rather than paying interest, and then that allows other people to have liquid funds. Basically, you're supplying the DAI into a vault, like supplying Solana into a vault, and then other people, and then you can liquidate it. So I don't know exactly like which way the kinds of ins and outs are going in that, but that's generally how I understand liquidation from the context of MakerDAO, if that helps.
Yeah, that does, because when you say a vault, is a vault like a collection of people that have all put in DAI?
You have yes.
Are there many vaults?
There are many vaults, but they are each vault has its own account. This is my understanding, anyways. Each vault has its own like address, and then you are signing that address in order to deposit into that vault, and the transaction that you've made, like you're signing, kind of then registers the amount that like you are due to maintain over collateralization for. But the whole vault itself is, as far as I understand, you would want to double check, of course, is its own single address. And in fact, like this is even a problem for some of the vaults, particularly the ones that are collateralized by USDC, because USDC has a blacklist capability for their currency, and so any address that they want to freeze the funds in, they can blacklist it, and that address can no longer move or make transactions. So it's possible, again, you'd want to double check, but my understanding anyways is that that whole vault for MakerDAO, the USDC vaults, they could be like completely frozen if
So everyone
regulators wanted to.
Yeah. Well, I do want to switch gears just for the last couple minutes. I want to throw the floor open to where do we go from here? Like, what are some ideas as we look at the whole Solana ecosystem as a group? Are there any avenues that seem promising to y'all? Or like, how would we approach the question going forward?
So
Solana.
I can try to take a quick little stab here. So one thing, like, so there's this protocol called Nina.market. It's the Nina protocol, and it's a music publishing protocol. It's very similar to Bandcamp, and the people sell their pieces as NFTs, and it's very like functional. Like the artists get to set the prices, they get I think like 90% of the secondary resale market, or they get to determine what percent of the secondary resale market they take. They get 100% of the primary retail market, and it's like, it's a protocol. It's like a very specific, like, and they've done it specifically on Solana because like it's approachable for the people that would want to use the service that they're programming. And I think like the kind of like the larger question for Yak Collective is, it seems like there's like a lot of different, like in this like exploratory phase, it's really just kind of like looking left and right, back and front, and sort of just seeing what's around. But I think like more and more like the question of like what it is that like Yak Collective would like to do is going to become like more of a determinate force of what to focus on, because there's like, you know, there's talk of like making a DAO, which is one thing that could happen but isn't a necessary thing to happen. It's possible to make a protocol. It's possible to use the technology to achieve some other ends, and I think once we have a better sense of what that is, it'll be a lot easier to answer this question of what to focus our attention towards. That's sort of my perspective on like the orientation question.
Yeah, I like that. Like where, like would we use a distributed app for distributing some of the YC work? Like is that an avenue of moving forward? Yeah, I like that a lot. That's a good way of framing this.
Yeah, and to riff off of that, and I guess I'm currently slated to talk about this next week. But the questions of identity management, like, seem to be very interesting, and how that maybe does or doesn't plug in very well right now to the Solana ecosystem. Like if there are going to be projects that hit on that. A lot of this discussion, this is not really a Solana, or not a Solana question at all, but a lot of this discussion, looking at a lot of the links, Kiran, that you put together, really put me in mind of like, I wonder if there is blockchain that leans more into the ledger aspect than the financialized implication of that ledger, because it feels like a lot of, whether it's proof of work or proof of stake, like all of these systems so far, some of it's built on security, but a lot of the architectural choices are being made to sort of support that financial ecosystem. And maybe that's necessary, but I'm wondering if there are other chains that take other paradigms that then might be more useful for like nuts and bolts applications. And like I said, I know that that's not a Solana question specifically, but just looking through this and thinking back on our previous conversations, that's something that's bubbling up in my head.
Yeah, one thing that jumped at me, Nathan, when you were talking about that is just what would it look like for one of these protocols to focus more on the ledger aspect than the currency. It did feel like Solana does, like, the focus is actually not on Sol for so many of these projects. It's on their own internal coins, which I thought, and I know there's always a financial backing, right? Like you can go and look at the total value of each of the tokens. But I think because it's very easy to mint your own tokens on Solana, it takes on a different feel than the Ethereum ecosystem, if that makes sense. So like, I think that is Solana, but I could be wrong. Like, I think the ledger aspect is more important here because it's an easier ledger to write to. And I think that's a good thing for us in particular.
I don't know. I'm looking for just something that we can actually do immediately. No matter what. And I haven't yet identified something in blockchain. In DAOs, yes, but in blockchain, not.
Like, I think the cheapest thing that we could pursue that actually would just take one of us probably a few hours is just like some product that we've made, or like I know you all have published a newsletter, or even like the previous art that has been created, to put it on one of the NFT marketplaces. That would actually be like just an exercise of getting us onto one of these systems. But that would be the cheapest experiment. And like, I don't know of another cheap experiment. Yeah.
I think we have that in Mirror. We're still trying to figure out if Venkatesh owns a wallet or the Yak Collective, but it's not doing. It's using, I should say. Looking for us to do, not just to take an existing tool and use it the way the tool was meant to be used in a immediate sense.
I see. Well, in theory, looking at the docs, it did seem fairly easy to just create a token around YC. Like, I was looking at like old history in Discord, and I saw that there was a previous experiment on using a Google Sheet to like mint thing to keep track of activity in a way and like assign tokens to people, like a token drop. Like, we could just do a very cheap version for like I don't know, a couple of people putting in Sol, just because Sol is quite cheap at the moment.
But we're not going to use it.
Yeah,
the
like
question is how can you use it? Not, I can buy coins, I can buy Russian rubles. Doesn't mean I'm doing anything in Russia.
Yeah, I mean, I think it's interesting that like it's like almost like an interesting contradiction here with what's being said, like not wanting to use something that is already there, like it's just using it, and then not wanting to do or make something because we wouldn't use it. Like, I think the two have to kind of go together. And I would also sort of make the claim that like one of the like large driving ethos of this this space, particularly from like a dev point of view, is the composability, like actually building and like making things out of things that people have already made. And so I think like if we wanted to do something, like the thing to do would be to like make some smart contracts that like pull in a couple of other contracts that have already been made, and then see like how we can compose them in a way that does something that is either interesting just for the sake of being interesting and experimenting, or has a utility for Yak Collective.
Okay, so how do we put together a smart contract like that?
Well, we'll have to learn how to write smart contracts.
No, okay, so I take a piece of code that's a smart contract. What do I do with it?
I mean, a smart contract is just a software. It's just an application. So we'd be making an application and pooling from
That's easy.
functions from other smart contracts.
And like, I think one of the things I got from like the year-end review last time was just some of the projects that YC does, they have like this drop-off rate. So maybe you could incentivize a particular project that we're interested in. We could like combine this with Mars rover in a way and say, or like forget Mars rover. You could literally do the blockchain governance one, and like we could try a smart contract for attendance or participation, just for fun. Because I thought, like, I got two different ethoses of YC when I first joined. One was tinkering, right? Like, we're just like making things in the hopes they'll be useful in many years. But the second one was like, how do we organize? Like, we're just interested in decentralized organization. And I don't think anyone has really solved that second problem yet. So if we want a tinkering smart contract thing, we could just do like literally measure attendance and have people kind of check in to get tokens or something like that. It could be something very basic.
Okay.
That is the interesting meta question of this whole of blockchain ops, right? Like, where do we want to? What are we trying to get to? Like, is the goal to get to the next project on blockchain, like just to tinker with, or is it to actually get to a like a useful usage of blockchain within YC?
If you ask me, the answer is yes and more. In other words, we have people that want to tinker with blockchain in order to learn about it. We have people that want to build a DAO using a blockchain. People that don't want to build a DAO but want to use blockchain because we're distributed in some sense. You know, all of these answers are correct. And we don't even know. I mean, it's the other way around, perhaps. The question is, how can Yak Collective use blockchain in order to have better governance? So blockchain is a means, not an end.
Yeah.
Really, different people have different desires.
Yeah, it's interesting though. I mean, like, I don't know, right? Like, maybe there's like max, generally speaking, over the course of like a month period, like 20 people who are like really engaged. And that's like on the high side from my observations anyways, at least on the server. I don't know, like in the larger ecosystem. And kind of seems like at that small number, like coordination issues, like I don't know if like a 20-person organization needs to be a DAO, like just to like align incentives and manage coordination. So to me anyways, it seems like tinkering with the technology and kind of just hacking together some different things, just to see what the kind of results and consequences of that are, and what kind of attention that attracts. Like, is the kind of thing that would then it'd be clarifying like what the DAO's function was in relationship to that practice, rather than attempting to just kind of make a DAO whole cloth out of like to solve like distributed governance amongst like 20 people. That's kind of like how I see it anyways.
Yeah, +1 commits, because I think even whatever you do with a DAO, it doesn't solve the physical problem of people actually having to do things in the physical world. Right? Like whatever incentives you put in place, for like a 20-person organization, like you said, even for I'm not convinced even for like a 100-person organization or a 500 one, like doing this through a DAO doesn't feel like super clear, because you still need decision making. You still need like physical things to be done, and it's not really economical to have a DAO. I know for like bigger things, it would make sense, I think, when you have support, or when you need to have like very distributed authority in a way. Yak Collective is so distributed in that no one really like. I'm not really sure what the decisions need. Like you just need a voting mechanism on Discord almost for some of these. I don't know if like an incentive based pool will actually help.
We have crossed the hour limit by 10 minutes now.
Oh yes, good time check. Should we just like we'll call it and take it to Discord for like future follow-ups. Thank you for adding so many notes to the options column, and then I think based on what we discussed on Discord, we can figure out how to take that page forward and or if it needs to be taken forward in some meaningful way.
Next week is whom? Nathan.
Yeah, I think Nathan's doing one about identity management.
Yeah, blockchain identity solutions. Okay.
Yeah.
Okay. See you next week.